Hi, good morning. Brad Langille here, CEO of GoGold Resources, Mexican company with an operating mine and one of the best or the best development asset in Mexico. Well financed, lots of cash in the bank, more than 75 million US cash in the bank, no debt. And good to see you this morning, Matt.
Good to see you, Brad. Been a while since I haven't seen since the beginning of the year. I think we did a sort of technical analysis and due diligence session with you back then. Pretty tough time out there. I mean, it seems like no one likes silver at the moment. What's going on?
Well, you know, we are in a cyclic industry, and you have to recognize the cycles. Now, I believe we're at the bottom of the cycle. I think you have to take a little bit of a contrarian view here on the metal price. What we have is the US dollar at a close to a 20-year high, which obviously precious metals are priced in US dollars predominantly, the US dollar, and that reflects in, a lower appearing gold silver price. That being said, things never stay static. The US dollar will probably break at some point, and the metal's going to rip again. You know, the thing about the market too, Matt, I believe is that this kind of pulls the herd a little bit. You know, the weaker marginal projects out there are going to go by the wayside, and but the strong projects like what we have in Mexico are in a great position. We've got tons of cash. The window for financing was open. Sometimes we were a little criticized when we took financings at $2.50, $1.50, $2.85. But the money was offered, and we have a bank account with 75 million US cash in the bank and no debt. So we're well positioned.
Yeah, okay. We'll come to that in a sec, Brad, because obviously if you've got cash, a certain amount of cash, there's a lot of things that are in your control. But I just want to stick with the markets right now. It kind of feels like in precious metal, gold and silver has got this relationship with the dollar. Obviously, historically, it's often been seen as an investment of for safe harbor. Quite frankly, it's a smart investment. But it feels like there's a kind of generation sort of coming up now who's not as interested in gold, not as interested in silver for the metal value. Is that, you think, putting some kind of pressure on the equities, or is it purely down to this kind of this kind of COVID period that we've been in and the printing of money?
I think yes. I mean, there's a generation that hasn't been as much into precious metals, been more into the tech sector, and I mean that's taken a tremendous beating as well. And which one is going to reemerge here first? I lived through the bubble and crash of the .com in 2000s. I was in this business. I've been in 30 years, and it took an awful long time for that NASDAQ index to come back, and for the tech companies to come back. And on the back of that collapse of the tech sector, the precious metals had an enormous run and had a decade of growth. We could be set up for that again.
Yeah, I lived through that myself. It'd be interesting to sort of see what distractions, what other distractions come our way. We've had cryptocurrency, we have NFTs, and obviously you say the tech sector had a good run for a while. And I wonder what kind of new dawning reality it's going to take for people to kind of maybe look back towards gold and silver. But like as you say, let's go back to you. You've got $75 million in the bank. That's a great start. But if we're talking about contrarian investing today, which I'd like to, why now? Why do you feel we're at the bottom?
I feel we're at the bottom. I mean, mostly for me. I mean, my expertise is obviously building mines. I built 4, and we're getting ready to build number 5. And focusing on building good businesses in the mining sector, and specifically Mexico. That's my whole career. But I think the biggest indicator to me, again, is the dollar. I think back to the last time the dollar was here. And it's just a point that, in my mind anyway, gold really did its job. Because last time the dollar was here, gold was around $400 to $600. And we printed a lot of money over that period of time of 20 years, and an enormous amount of debt created. And what has gold done? Okay, gold feels like it's at the bottom of its cycle right here, at 16 to 1700. But it's a long way from the kind of $400, $500, $600 because it did what it was supposed to do. You can print all this money and play all these games, but gold is the true indicator of truth, which is that money is just paper, it's fiat, and gold is real. It's a natural currency. I would argue that it's done its role over the last 20 years since we're at this last dollar high. The dollar's going to crack at some point, and gold's going to take off again. If I was a fund manager, generalist, I would really be looking at having a position in my funds of gold. It truly is insurance.
But I guess what I'm trying to get at is because you and all the kind of CEOs of precious metal companies have got to persuade generous fund managers that is the case. You could persuade this new generation of investors that is the case. But it feels like the sort of same arguments come out each time, and we're kind of hoping that it'll eventually happen. But it's kind of year after year after year. It doesn't do what historically and traditionally done. Something's got to give, and you think that's the dollar.
I do, and it doesn't do what historically is supposed to do until one day you turn on your screen and it just doesn't. That's my other experience in this business. When things change, they change fast, and you got to be there. You got to have a position. I would argue, even if it goes a little lower, this is a good entry position. Get into good companies that are well-financed, great projects, not marginal, and get your position and be ready for it. It'll turn fast.
Okay, well, let's talk about that. I think that's really interesting. Okay, so let's run with that thesis. Okay, but you need to get into something. It needs to be a good company. It can't be marginal. There's a lot of pressure coming up in terms of inflationary costs, access to people, all of those wonderful things that have happened through COVID, which need to kind of settle down again. You got decreasing prices, putting pressure on companies. So some companies won't come out the other side here. So give me the reasons to believe yours will, and yours being one of the stronger positions when it does.
Yeah, I mean, we have an operating mind, and that's a few things that's important because we have an operations team. And our operating mind is, we won't belabor too much into that, but it's a real great ESG environmental project. We process old mine waste and made money doing that. But what's really important in GoGold is our Los Ricos project. That we entered in March 2019. We've spent about $60 million US there so far. In 3.5 years, what we've accomplished is truly phenomenal. I credit it to a very experienced team, our abilities in the capital markets to raise billions of dollars, which we've done over the last 20 some years. But really, it's a project. We have a district where we have we've drilled up between our Los Ricos South, Los Ricos North, about 242 million silver equivalent ounces in all categories, and good high quality resources over those 3.5 years. And along the way, we've in GoGold, our list of investors has become more and more institutional, along with great retail investor following as well. But the company is just in such a strong position, technically, cash, project. We're there. We're ready to launch, and we have something new that we announced this morning as well.
Yeah, I saw that you've been picking up a little bit more land, and again, let's go there in a second because I want to see what you're kind of doing in terms of consolidating the district here. But if I look at things like, in fact, last time we were speaking, it was over a year ago. The PEA on Los Ricos South is well understood. A massive drill program lined up for 2022 on Los Ricos North. How do you manage your time, manage your money, and manage that kind of output and noise into the market? Because you've been fairly quiet for about a year, right? But people need to try and understand what the economics of this thing could be. Looking at drill results, it's a bit hard to kind of work out how you build a mine, how you intend to build a mine, what you intend to do with this thing as a district. So, can you sort of describe how your thinking has evolved in the last year?
Yeah, I would say we've been relatively quiet in the last year, and relative because we were making a lot of noise before that. We had accomplished a lot. We had the two projects, the south and the north, they're separated by about 15 kilometers. And in the south, we got right in there, and we defined 63 million ounces of M&I and another 20 million ounces of inferred. So a nice sized resource in silver equivalent. And we did a PEA, so we put a value on that. And then we were waiting for something in the south. There was always one piece of ground down there that we knew we wanted to get. And, it took a long time. It took a couple of years. But while we were waiting for that to happen, we pivoted to the north. We had already done a bunch of consolidation up there. Like you mentioned, this is a consolidation story as well. And we had a critical amount of ground up there. We got the drills going. I mean, since March 2019, we drilled about 200,000 meters. And in the north, we came out with our first resource just under a year ago, which was 162 million ounces of silver equivalent. And that resource, I think the next thing for that resource is we continue to drill up there. We've had some releases. But in the first quarter next year, I believe we'll be in a position to put a PEA around that and put the first economic look at that. But really, now we've pivoted back to the south. We have that ground, which we worked so hard to get. And it's not just ground. We haven't just picked up some ground. We've done some drilling as we were waiting, due diligence drilling, we'll call it. And we had permission to do that. And it's yielded incredible results, which they're bound to add a lot of value to what we already have down there.
Right. Okay. So what were you finding in the north? Because you were doing a lot of drilling since your last spoke. So this is kind of big catch up moment for me on what's been going on. So how much drilling did you do up in the north, and what were the grades compared to what you were seeing down in the south?
Yeah, the grades in the north were pretty similar, maybe a little lower, but a lower strip ratio in pit. But there's still grades of if you use a 50 gram silver cutoff in a pit, they're grades of about 140 grams silver equivalent. And that's, if you equate that back to gold, and a lot of us in the business, we think of gold as far as economics, gold equivalent. And we're 60% silver in this deposit, 40% gold. That's like having close to 2 gram open pits, that's phenomenal. So in the north, great high quality ounces. In the south, a bit higher grade. I think you're going to see the grades in the south start getting substantially higher because of this piece. We knew a lot about this piece we're going to add. It took time. It took time. Sometimes things that are good take more time than you think. And quite honestly, it took more time than we thought to get this included in our land package.
Okay, one of the other things we've seen happen, certainly during the kind of COVID period, is the way that companies evolve their thinking. This comes back to the earlier question I asked you. They've had to evolve their thinking about how they get into production, because going to the market with a large capex number, that's not a lot of fans of that at the moment. So companies are looking at starter pits. They're looking at smaller capex. And getting into production earlier and getting some cash flow and being less dilutory to their shareholders. And also, it's a little bit easier to go and raise capital, when you're asking for less money. So that's why I ask about how are you building the picture of what's going on? You get $75 million in the bank, which sounds like a lot, but you could burn through that real quick, right? So you've got to spend it the right way. Every dollar needs to become $3 in terms of value for your shareholders, right? So has your thinking changed, or is it a question of just drill, and then hope the market comes back and be able to raise more money, at the right time again?
Yeah, definitely the last option there. No, not just spend all our money on drill. No, we have something in the south. What we see there is exactly that: a lower capex number, super high grade, into production fast, easy road to permitting. And, it's funny, my business, we go through cycles. And I was talking to somebody in one of the majors, actually one of the Mexican majors. They said, why do you guys come down here and all you want to do is put these big, massive holes in the ground? Have you ever heard of bulk underground mining? like, an 8-to-1 pit. And so we reevaluated Los Ricos South, and we went through all that old drilling and this new stuff coming in here as well. And we think we have this plum that is real good grade, and that we can put into production in a bulk underground scenario. And I'm not talking, half-meter wide, super high grade, diluted to a meter. I'm talking things that are 5, 10, 20 meters wide at big grades, and even sometimes even wider than that. It's a gift we have in front of us right now. We're going to drill that. We're going to engineer that. We're going to fast track that to production. Do it the right way. I'm not talking about cutting any corners, but it's something that can generate, we believe, and let me arm wave a little bit, but we believe it's something that could generate a lot of cash, and that can be the engine that gets this whole district into production. And we have a pipeline that's there. So we got a real good path ahead of us. And this final piece right here, Matt, I can't stress enough how important this was to the company, and how it's going to be the catalyst that just gets our news flow running again, gets this company on fire again.
Okay, so can I just want to picture what's going on. So you knew you wanted this piece of land, the Eagle concession at Los Ricos South. Maybe we could whip it up and we get a sense of
Sure.
what that does for your land package in a second. So Los Ricos North, you knew you had something up there. You've spent a bunch of money up there, run a bunch of holes, and you've come back with sort of average sorts of grades for the district. What would you say, 2 grams gold equivalent? Open pit. So there's something nice to be had there. But right now, focus back on Los Ricos South, and let's see if we can get that into production sooner by going through a process. Okay, understood. That kind of makes sense. Certainly in terms of these very difficult, economic environment we all find ourselves in. So with regards to the $75 million, is that now all going to be back at Los Ricos South, or is there going to be some left to move things along at Los Ricos South North as well?
No, we'll continue to do a bit of drilling at Los Ricos North. The idea there is that we want to get to economic study here, hopefully in the first quarter next year. And not that people just look at the 162 million ounces up there. They say, oh wow, this has really good NPV as well. And that'll become the pipeline, but the engine is going to become the south right now. So
right, and why do an economic study? Why not just be happy with a resource update? I mean, given what the market's doing at the moment.
Yeah, because I think if you look at a resource update, it's just ounces, and you have to put the whole context around those ounces. What's an ounce worth if realistically it can never come out of the ground, right? So we want to show people, no, these are great ounces, and more than mining gold and silver, eventually we want to mine dollars, and we want to show people there's good dollars attached to those ounces. So that's the reason for the economic study. And I think the other studies that will be coming will be hopefully in the first quarter. A new study on, as the drilling unfolds here in the south, a new resource in the south, and then we've been working on a feasibility in the south, but we've changed our tack a bit, as we've been talking about here, and we'll come out with a pre-feasibility study in the second quarter, and we'll be on a fast track to getting permitting as well. And that feasibility study will incorporate some of the engineering changes and new resources we've added in the south.
Okay, understood. Hey, so do you want to just kind of whip up a map? You said you might do that for us, just to get an idea of this consolidation, right?
Yeah.
Why it's so important.
Yeah. Just fire that up there. There we go. So that's the whole district, and and so the north up here, we've consolidated and then did a lot of drilling up there, about 120,000 meters of drilling. And here's the south. We've consolidated that as well, but we were missing that gap in here, which we now have. Hallelujah, it took a long time. But anyway, I'll focus in on that for a moment. And we've been very much focused on some drilling on the Eagle, and should initialize right here in a moment. There we go. And I'm just going to throw the claim boundaries on here and show you what we have. So all of this was ours except for this chunk here, all within here and goes down here. And here's where we had our 83 million ounces of resources. And it's a structure that actually runs for tens of kilometers, and it runs right through here and off our claims at this point here onto the Eagle claim, which now is our claim, and continues for 3.7 kilometers and back onto our claims. So in this area, and we'll just kind of look underground here, and I'll turn on what we have had, which is the Los Ricos vein. That's where we drilled off our ounces. And here's what we now have added, we believe will be the Eagle vein. So you can see it's
when you say we believe, there's historic data on that, which has allowed you to plot those points?
Yes, there's holes that we haven't released yet that we're waiting for assays on. But this stuff is, when you're seeing things like 20,000, 20 kilos or 20,000 ppm silver equivalent, it's not hard to pick it out in the core. And we have a lot more drilling that just allowed us to postulate where the vein is from visual examination of the core. Now, the vein is not a narrow vein. It's something that ranges, we have drill intercepts up to 70 meters of good grade, over 460 grams of silver equivalent. But we discovered something here that, our rethinking is that, these were two companies, and this is interesting. Let me go on a little bit of a tangent really quickly. These were mined or explored back about 110 years ago. And on this side, it was the family who had found the Anaconda. We have a ton of data from that. Don't know if you can really see, but there's their old workings. And on that side, they did that. They took out about 1 million ounces. And they left a ton of ounces for us. We've already found 1 million ounces. On this side, it was a different company. And they were from Boston. And they were a bit more a promotional penny stock promoter. And they went in there and did exploring. And they actually had one of their main promoters. This is what's crazy. We've done a lot of the history here. Was from Halifax, Nova Scotia, which isn't that far from Boston. And they, like I said, they did a lot of promotion. They did some development, exploring. And they missed what we found probably by about 50 meters. So that's the serendipity of the mining industry. Anyway, back to the point. This piece right here, we believe there's a beautiful plum right there, like something with really incredible grades, that what we're going to do, probably starting in January, we're going to go underground in some workings that we've already been in, called El Troce. We've already done some rehab there. And we're going to get underground. We're not far from what we're drilling. We're only a few 100 meters away, and we would be there. But what we found out is that everything, these really super high grades, tend to be in a band from about 1,100 meters to about 1,250 meters above sea level. So we redirected all our thinking around that, and it's working out, because following that theory, we're really hitting some tremendous grades. And we see the opportunity, and we think that the economics could be very good by getting in there and developing what we're finding right now as a bulk underground mine, where we not mine the narrow widths of a meter, but really what we're mining are more the 10, 15, 20 meter wide zones, which are more like some of our peers in Mexico, the grade-wise, but where they're mining a meter wide. And that's the difference. When you can combine those high grades with wide widths, you need far less development, you need far less stopes in operation, and you're supplying a smaller mill. That's the big point, smaller mill. This option, we don't need to start with a 5,000 ton a day mill. Maybe it'll be something more between 1,000 and 1,500 tons, which is a lot less capital, but we're feeding it with very high grade, which should, and studies will demonstrate it, generate an enormous amount of cash flow.
Well, yeah, sure. Okay, so you're talking about the potential cost savings there, and obviously it contributes towards the cash generative component of the plan, as it were, or maybe the plan that's always been in existence, but you've now kind of put into operation. Into effect, really. It costs you, what, $2.1 million US paid over 4 years. So it's super cheap. When will we get a sense of what the economics of this total new package could look like? Because that's going to be a key defining moment for you, isn't it?
Yes, it will. And I think we have a couple options there. The options could be that we update, which would be very, very quick once we have a resource, update that PEA. And we show this different approach, and followed with a more definitive study, the pre-feasibility by the second quarter next year. And in the
when you say definitive study, I want to make sure that the semantics. Do you mean a definitive feasibility study or a slightly more advanced feasibility study?
Yes, thank you there on the terminology. It would be a pre-feasibility study. What we have done in the past is a pre-feasibility, because we do not believe that getting a small debt facility, say along with our cash, to do this would be difficult at all. We have lots of offers, and so we don't have to bring it to, say, a bankable feasibility. We can be at a pre-feasibility, but then the important things, the really important critical things in the engineering, we could bring them to a FEED or a front-end engineering design, which would be at a feasibility level. But we're in a well positioned with $75 million to do something here that is probably quite a bit lower capital than what we published at $125 million, because that's a totally lot bigger mill and a $10 million pre-strip and what have you. So we have this plumb, Matt, that's easy to get to with some existing workings, rehab plus development, and get into that plumb. It's wide, it's super high grade, it can feed a much smaller mill, lower capex, and could generate a lot of cash, which propels the district.
Brilliant. So I just want to make sure I heard this right, because it's occasionally a bit of a crackle on the line here. Is the PEA on Los Ricos South currently is $125 million with additional sustaining capital of $62 million over life of mine. 18-month build, really quick. Did you say that you would look to do a smaller version of that, or you look to do a larger version of that, given the new land package you picked up?
Yeah, and all this will be studied. And, I'm just trying to give you a little bit of our vision today. You need to rely on studies as we publish them. But what we see is a route where we would build a smaller mill. And we've done this before. Say you build a 1,500 ton a day mill. In the front end of that mill, the crushing circuit, before you put it into the spinning mill, you build that at, say, 3,000 tons a day. And then you build a smaller mill, and you design it like we've done before. We build a 1,500 ton a day mill and we expand it to 3,000. So you do that, smaller capital, get to that super high grade, fund everything, and then you got your pipeline, build out the district, and that takes us from here to way up there, and we can do it. Obviously, Matt, we're not opposed to somebody comes with a great offer along the way. Sometimes that happens. When you're getting ready to build it, somebody shows up and they're ready to write a big check. So our focus is to return the best value to our shareholders, which I'm one of the largest ones. But we built mines before, and we'll do it.
That's fantastic. So I guess in the old days, people may have referred to it as like high grading, but this seems like super smart way of getting at the high grade component early to reduce any dilution, pay for the capex quickly, and then build out as you're cash producing after that. Okay, I get that. That makes sense. Wow. Okay, that's good news. And by the sounds of it, Parral is continuing to churn out cash flow and contributing towards the G&A as well. So no change there in terms of life expectancy.
No. About a week ago, we had a press release. There's this VAT tax. It takes forever to get it back.
I saw that.
And
yeah.
One thing is in the press release, but some people might not have been worded just quite perfectly. But really, we recovered a little over $5 million of VAT tax from 2017. But on top of that, they paid us interest. So out of the 20 million, we recovered 5 for now. Now we're working on 2018, 19, 20. That 5, they ended up paying us $11 million when you include the interest. So the 15 left probably is going to be more than 15. So we do have another source of savings, I would call it, that we're working towards getting as well. It's nice to have those checks coming in.
No, I say, Brad, the balance sheet looks healthy in terms of the cash coming in, and obviously well done on the input tax recovery plus the interest. 15 more minimum to come. I guess today for me was about understanding what the plan is. Has it evolved? Has it changed? And it feels like you're adapting. You're being agile in terms of market conditions, and at least you're in the position to make those decisions and not have them made for you. So that's good news. Yeah,
and the plan is very clear. Between now and from now until the next 12 months, what you're going to see is a lot of drill results. And I would say that I think we're into something that is significant. There should be a lot of very good drill results coming as they arrive from the lab. And as we, some of them, I think, will be so high that we'll do an extra QA QC on them because there might be things, that we haven't seen that high before. But then the next thing is get to a PEA in the north, say first quarter next year. Maybe we revise the PEA in the south, follow quickly by, the engineering for the pre-feasibility and have that out by the second quarter next year. I mean, we have the next 12, 18 months is just going to be continuous news flow, and we've got a bright path ahead of us. From here for the next 5 years, I think we're going to build out this district to be something that is really special in the silver business and certainly one of the top assets in Mexico.